Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, December 13th, 2024. It is 10:26 a.m. Eastern Time. I'm starting the video, and here's what we're going to do in this one. We're going to take a look at the Nasdaq 100, the top 8 or even maybe 10 components real quickly. I did that yesterday, but there's a point to doing this update. And then Treasury bonds briefly as something to watch, I think very importantly right now, and some levels to watch and developments to watch for. And that should be it. Maybe even touch on the small caps. I haven't touched on that in a while. This is actually video number 2 for me today. There's you've probably heard me complain about my screen recording software, and somebody recommended another one. I looked into that. It doesn't work for me. This one, I was mostly through this video, and what happens is the click buttons, when I pause it sometimes and unpause it, won't start recording, and there's really no way to see. There's a little box. If you're not paying attention, you can see the recording is either still going or not going. So I'm gonna reach out to that company today. I have an idea to kind of well, feature requests. We'll see if they add it. So I got to do it over again. And the point is, I'm telling you, because it was actually more pronounced this morning as I started recording this video about 20-30 minutes after the close. And what that is, I've noticed a big disparity right now, false skies of strength in the Nasdaq 100. So I'll start out here. It's all about Broadcom. Broadcom reported last night. And Broadcom, if you recall, still above the primary uptrend line here. I highlighted here and here when it hit the 200 days in that trend line. It's likely bounce opportunities. It did. I wish I could tell you I bought it and tucked it away. I didn't. I don't own it. But it popped up today. It reported last night up big, up 21.5%. And earlier when I was doing the video, and we're still positive in the Nasdaq 100, but it was up over 1%. But what stood out to me, even in pre-market, it was all about NVIDIA. I mean, you can't literally say it's not the only stock up, but I'm going to go over the market breadth. I looked at the, as I often do, the entire components in the Nasdaq 100. I'm going to show you all that, the equal weighted, and why this is giving a kind of maybe a false guise of strength in the Nasdaq 100. And what it might mean. So what I'm going to do here is I'm going to move over to the right. You can see the components. Here's the what I call the Mag 8, which now takes it down to Broadcom. I started referring to them as the Mag 8 a couple months back because it's, that's an important one as well. And you can see Apple red, NVIDIA red, Microsoft red, Amazon red, Alphabet red, Meta red, Tesla positive, and Broadcom up positive by 21%. And so what you're seeing is a heavier distribution than it looks like in most of the market leading stocks. Now, I'm going to preface this. I say this often. I'm going to repeat it right now, and I mean it. One day doesn't make a trend, but it kind of shows you what's going on today. And point being that you might say, Apple's only down 0.2%, NVIDIA's down -6%. That is on a backdrop of QQQ being up in the Nasdaq 100 futures about 1%. Just right before when I first started recording this, they were up over 1%. You saw something similar. And what that means is you got to realize that every dollar that goes into QQQ or the Nasdaq 100, when the index is up, most folks and institutions are buying the indexes. And Broadcom's skewing it today, but for every dollar that goes in, proportionally, most money goes into Apple, the top component. Second most goes into NVIDIA, then Microsoft. I haven't updated the holdings, but back when I last did it in 2023, I thought I did it more recently. Doesn't matter. Those top components often make up about 10% or so. So to see on a day the Nasdaq 100 is up 1% and you see a top component like Apple or NVIDIA negative, that means the institutions, individuals and mostly institutions, are selling the stock into that strength. And that's offsetting that impact that every dollar, remember, when you have Nasdaq 100, every dollar that goes into it, if Apple is 10% as a top holding or NVIDIA, 10 cents of that dollar goes into those. So it takes, there's that offsetting effect quite a bit to see them red. And again, it doesn't make a trend, but I'm going to show you how I analyze the markets. So years ago, you can see again the component list over here sorted by market cap. And years ago, I came up with something I just absolutely love. I call it my real-time breadth indicator. Figured I could do it with this charting platform because back in the day, if you want to know what the market breadth was, especially when I started trading, it was typically only reported on an hourly basis, and it was the S&P 500 or maybe the NYSE. No real time, no market internals on the Nasdaq or the Nasdaq 100. Again, back then. Now things might have changed, and so I figured any sector that has an ETF or the sector itself, if I can chart it here, or an index. Even those that don't have market breadth statistics, like let's say the Russell 2000, for example, I just simply pull up the components. I sort by gainers and losers, which I just did now. And you can see, and then I click on the last gainer, that's actually flat. PCAR is the only last one up 0.1. And that tells me only 14 out of the 101 stocks in the NASDAQ 100 are trading positive. All other 85, 86 plus stocks are trading in the red. And yet, if somebody asks you, hey, how's the Nasdaq doing? Oh, Nasdaq's up good. It's up at 1% today. Okay, so that is abysmal market breadth, unusual bad. And it just shows, again, distribution. Now, again, almost all to do with Broadcom today. And another way to do it that's real easy is, you can do this if you don't have a charting platform that can do that. Just go to QQQE. And so at the same time the NASDAQ 100 is up about 1%, you have QQQE, the equal weighted, down about almost 0.4%, 0.4%. That's pretty stark divergence. Again, one day doesn't make a trend, but watch that going forward, and it just kind of shows you what they're doing today. Also, if you look at it, I'm not an expert on AI chips or an expert really on anything. I'm consider myself a jack of all trades and a market master of none when it comes to the fundamental stuff. I'm not more of a technical charting guy. But I have been saying for quite a while that NVIDIA cannot and will not maintain this undisputed lead in AI chips. And so all I gathered, I literally just glanced at headlines and heard Broadcom, crowing about AI, the demand for AI related chip sales and all that. And so I would view this as, any gain to any big competitor, potential competitor to NVIDIA is NVIDIA's loss as far as market share goes. So, and I think you're seeing that today. NVIDIA's down. Another big chip stock that cited AI as the reason for their blowout quarter or the big demand they see going forward takes away from NVIDIA. So you can look at it that way. And to me, NVIDIA, when that goes, like I said, I believe the market goes. So today's an up day overall, but again, depends on what you're trading. The NASDAQ 100 equal weighted is down. When you look at SPY, you can do the same thing. If I sort by, here, I'll do it real quick, just kind of give you an idea. Scroll down. MCK is the last of the green, and that's actually all zeros. This is the last green one down here. It moves. There's 500 stocks here, so it's moving constantly. You've got about 115 trading green today in the S&P 500 out of 500 or 502. Remember, just like the NASDAQ 100, you have Alphabet, for example, has two share classes, so that counts twice as two different stocks in there, but it's 500 companies. Anyway, that's what's going on there is a very, very poor market internals. And again, so when you look at the regular SPY, green by 0.2%. When you look at the 0.1%. When you look at the equal weighted, it's down 0.4%. And watch those wedges too on the equal weighted. It kind of tells you the overall. I do watch these. I don't cover them every day for you, but these are the same trend lines I'm watching here. The August 5th lows on QQQE. All right, there's a couple other things I wanted to get to for you. I'm going to go over the top components of the NASDAQ 100. All right, we'll get off my watch list. I made my point about how what's going on today. A little quirky again, blowout move in Broadcom, which remains above its primary trend line. Longer term, we still have very much the big divergence on the daily and monthly chart. So something that's probably going to play out in the coming months to year going forward. But let's just drill down, and I'll do a quick update of what I did yesterday, the kind of status of those market leading stocks, or we'll just go over the top 10 in the NASDAQ. This is the primary uptrend line, QQQ. Still has that divergent high. Still broke that minor trend line there. And until this goes, that will, if and when that happens, that'll be a much more powerful sell signal, in my opinion, the one I've been waiting for. But we haven't had even a brief violation. It's been just beautiful, successful defenses of that up until I went on vacation and we rallied up, and we're still above there. However, as I did yesterday, I'm going to do that for you now. Let me just queue in, go back to sort by market capitalization. I'm going to go over the top 10 and just show you where we're at. I know I'm probably talking to myself in this video. I looked at comments. It's almost 0 comments the last couple of days. I get it. I was on vacation. Half of you or more are probably on vacation right now, or just not trading, because this time of the year it's full of whipsaws. It's not very conducive to trading, holiday season, all that stuff. But I just wanted to update this again. These are the same levels I updated yesterday. Apple has this minor trend line, and it's just ready to go. As I covered yesterday, this trend line comes off the mid-November lows right there. Nice, clean, well-defined. Even yesterday, you can see we had 2 intra-period violations. This is very important. I often talk about when trading a certain time frame. If you're on a weekly chart, you need to wait to that weekly candle. That's all that matters, is how it closes at 4 p.m. Friday. Trade an hourly chart, all that matters are these hourly candles. So what you see here is just beautiful technical analysis. 1, 2, and I haven't touched this trend line since I covered it yesterday. 1, 2 intra-period breaks. So skinny parts, we call them shadows. When the shadow is below the body of the candle, it's called a tail. There's another tail. And so those were intra-period breaks, only to see us close. My candles are set to show the green candles. We closed back above. Closed intra-period break, rallied back above. These are called stick saves, where the candlestick prints after dipping below. Even that one yesterday closed right here above. This is the first red candle. It will be finalized at 11. That will be a sell signal. Now, you want to look at this collectively. If this candle prints there, and as I like to say, the redder the better, all the better if you can get a follow-up red candle after that one. We'll see. I just wanted to point out that Apple still appears on the verge of triggering a sell signal on this 60-minute time frame. NVIDIA, as I've talked about, has recently, you have to squint to see it. It broke down, back tested. Really, I'm focused on this daily chart, and that's why I gave a nice thick trend line so I can see if we're below it. Beautiful trend line from 2020 back in October, and includes coming in at that key August 5th low there. And so, as I said, we did break down the other day. It wasn't very impulsive. Most of the other Nasdaq components, the top components, are still above trend. That's why this one's not going very far. You do have to take it, in my opinion, with a grain of salt, because we're in that lull between Thanksgiving and New Year's, where whipsaws are more likely. But a breakdown is a breakdown, even though you might take it with a grain of salt, meaning maybe not put as heavy a weighting on it. Plus, you've heard me say it once, you heard me say it a million times. If you have to squint, give it the benefit of the doubt when you're in a strong uptrend like this. So what I really want to see is NVIDIA take out that 132-ish, 132.60 level right there, those recent lows. And also, when you break down, thing about breaking down, you've been backtesting. Every day this stock has backtested since this breakdown on Tuesday. Backtest there, backtesting. After the backtest, because you can backtest for a while, or you can regain the trend line. I like to see the impulsive rejection. So again, 132.67, give or take, or even if you look, and I could even put a line a little bit below that. Why'd I do that? Because you have a reaction low right here and one right about there. So call it about, again, all the way down. It's a high price stock down to about 132, and but it has broken down. I want to be clear on that, and it's below trend. I cannot overemphasize the importance enough. Again, you need to see the rest of the lot go. The lot being the Mag 8, the stocks I'm covering right now. So that's NVIDIA on a sell signal. Just wanting to see confirmation with some of the other ones. Microsoft, again, same trend line I covered yesterday. The minor trend line here. We're starting to crack it now. Hasn't yet fully cracked. Break of that trend line should trigger a sell signal that should bring us down to this level at least. And remember, the charts are stacked. I've been giving you some near-term targets that we could see before the end of the year. Relatively small targets. But, if we get down and those near-term targets are hit, such as a pullback to that trend line on QQQ, then you get in a precarious technical posture that if you break that, whether you bounce first or not, it will trigger some much more powerful sell signals. So all I'm focused on now are just some short-term sell signals, and I pick. I'm kind of like a anti-bully. I don't pick on the market when it's down. You know me. I don't jump on the big down days. I tend to get out there in front of like the days it's up. When I see a day like today where it was green this morning, everybody's probably thinking, oh my God, that's so bullish. And I'm telling you what I see that maybe is not as bullish as it is. So it's easy for everyone to say on a down day, get bearish. I try to get in front of these and tell you the levels to watch before they happen, because if they do, it can be quick. And so we're right there. And we were there yesterday, and we're still there now. So I have to imagine last night, if those of you who watched Broadcom rocking in the after hours or in pre-market and the futures up, probably thought, oh my God, this market's never going to go down. Well, I'm telling you that most of these stocks are sitting on the edge of a technical cliff ready to break down right here. Amazon, there's that wedge I gave you yesterday, broke down yesterday right there. There's the red candle. Again, it's not going down much. It's had 3 more candles since below, but it's still below there, and now it's starting to walk away. So again, this is collectively, I'm going over the top 10 components of the Nasdaq 100. If 60, better even 70, better even 80% break down, that's a pretty good sell signal. So that's why I'm doing this, and that's why I do these long-winded videos. Alphabet, I told you on the 60, I don't have much of an opinion on the chart, other than maybe a potential buying climax recently. Meta, there it is, took out the trend line I gave you yesterday. I'm just tightening it up there. Meta has now broken down. It should head to that minimum target there, 605.75, which would be a drop of about almost 3%. That would most likely mean Nasdaq would probably go down, give or take that much. Tesla broke down from the minor trend line yesterday and back testing it right now. And so that one's also on a sell signal, still targeting at least a move down to this. Remember, Tesla was the one to put in a divergent low here, most recently come full circle with a divergent high. And then if and when that trend line goes, there's your next stop there, 360.45. Broadcom, I already covered that. Everybody's tripping over themselves to get this one today, and this gain will most likely be faded. That I can all but tell you. It's probably going to give back a lot of those gains if I am correct, and the rest of those Mag 8 break down and start moving lower to those aforementioned targets that I gave you there. All right, I'm going to give you a little level right there. There's the breakout point right there. You can see the recent highs, 185.18. Costco reported yesterday. I covered that one in the video too. Broke down yesterday, but that was pre-earnings. Never, don't always take a big grain of salt when something breaks down right before they report. But with now that they've already reported and the earnings are out of the way, it shot down today, shot up, and it's back testing. So this is simply a bearish rising wedge on the 60, one I gave you yesterday, a breakdown and a back test. Now, how it closes the day is important. So you can see the back test. There's a lot of volatility, a lot of order imbalances. When a stock just reports, you can see the big volume. So it came back up by a hair, but I call that a momentum-fueled overshoot. Again, that's why you just let the dust settle after a stock reports. You get a lot of order imbalances in the morning. And then let's see how this closes the day. And remember, on the daily chart, there's that same uptrend line right there. You can see the breakdown. We're still below it. So Costco is on a sell signal, coming off a big divergent high. Netflix, told you one of my favorite shorts, and it's funny, I wanted to cover this with you. Again, I'm probably speaking to myself due to the lack of comments the last couple of days, and that's fine. I do this for me as much as I do it for you guys. So I talked about, if I had to make a word up for it, I would call it subscription fatigue, where, I've got all these streaming services, of course, digital YouTube TV is my primary TV channel, and then I'll add on if I want to watch, back when Game of Thrones is on, you have to add HBO, and then you add that on, or you add it through Amazon Prime. I've got the Amazon Prime Video, and then recently they started saying, okay, even though you're giving us $130 a year, or whatever, for Prime, we're going to start showing you TV commercials unless you pony up a few more bucks. I forget what it is, $5-10. So sure, there you go. Even though I'm hardly watching anything on there. So like everybody, I think you know what I'm saying. You probably find yourself now juggling, up to a half dozen or more individual streaming services. You want to watch the latest Taylor Sheridan shows. You got to get the Paramount Plus subscription now, and all that. So Netflix is one. To me personally, the content is meh. And I know a lot of people love it. Don't get me wrong. I know there's a lot of subscribers. So I told you yesterday I canceled. Well, it's funny. And I also told you now I noticed that they're trying to get you to either pause it for a month so they can keep you on that auto resume so you forget about it. That's what I think most people do. I do it. I sign up for a service when I'm done binging the series or watching the series or movie I signed up for, give them 10, 20 bucks for the month. Then I forget to do it. 6 months later, I'm like, oh, am I still paying for Paramount Plus? I haven't watched anything on there in 6 months. And that's the business model that Netflix has. But again, when I think you're going to hit a tipping point and watch the economic numbers, we're seeing that. I didn't pull that chart up right now. Maybe if there's time, I'll get it for you. Unemployment has been ticking up pretty steadily. It's not rocketing up yet, but it has been trending up. The national unemployment rate. And you're going to see a point where these streaming services are just going to get checked. People are going to realize that it's gotten out of hand, and when they come and add everything up, you're paying hundreds of dollars. But here's what I wanted to show you. I know I'm digressing here, but check this out. So, other than the fact I noticed yesterday I wanted to cancel Netflix, they used to keep your, recommendations, and I believe they also they're canceling that if you cancel outright, and I believe your saved shows. I didn't clarify that. But what I wanted to show you, and I thought this was interesting, let me find it right here. So I believe literally as I was doing that video and explaining to you, just kind of for the point of all these streaming services probably going to be canceled, as the economy starts to roll over, I get this email from YouTube TV. If you have YouTube TV, I don't have to tell you this. It's the best thing out there. I watched two guys on CNBC once turn the TV on, and they weren't even the topic wasn't YouTube TV. One of them brought it up, and it was like Wapner or one of the other guys, and they were batting off each other how much they love it and how great it is. It is the best thing since sliced bread. With the to me, it blows cable away, blows DirecTV away. I've been a big fan. But this is just like Netflix, but even worse. These streaming services are just getting out of hand with these price increases. And this is something that I don't know to what extent, if at all, it's factored into the CPI, but it is a real thing. So literally, as I was doing the video yesterday telling you, all these streaming services, can I afford another $10 increase on YouTube TV? Sure. But I want to show you something here that's interesting. So they just popped it up another $10 a month. And that's not with taxes. You got about another $11 or so in taxes in there. But check this out. So I was one of the first ones on it, early adopter. So they piloted YouTube TV in my market, which isn't a big market, but I was surprised they did. I jumped right on it. And when I first started it, just back in 2018, and that's a little while ago, 6 years ago, it was only $35 a month. With tax, I was paying $39 a month. This is my first bill. I pulled it up today. Don't worry, that credit card number is no longer active. So that's I'm fine showing that on there. Okay, so where I'm going with this is my primary TV service. It is still the best one out there. I'm not going to cancel it. But since January 2018, I have gone up after this increase, it's going up now, 241%. And I think you're going to agree that maybe Netflix is not as much, or maybe it is. I've seen comparable increases there, just about everything else. And also the proliferation of these services. Again, if you like this show, you got to go get, HBO Max or Showtime or Paramount Plus or Hulu in addition to your primary services. So I think this is going to be a big thing going forward. And I think Netflix will probably be one of the big ones. Most people are going to keep their primary TV service, most likely. But again, that's a pretty big increase. I'll be looking at $94 a month plus with taxes after this month for a service that I started out and at $35. And It's a little irksome, if you will, that when they were rolling this out, they said it was just something they were trying out and it may not stick. And that's how they reward their early adopters, by hitting them with the same price hikes everybody else. So that's typical Google in action right there. Okay, and there's method to my madness. So that brings me up to Netflix. Remember, I'm going through the top 10 components of the Nasdaq 100, and Netflix, I told you, is one of my favorite shorts right now, longer term. And I'm not even identifying all the targets at this point. I'm just eyeing this one right here. I'm calling for this stock to drop over the next year, or even probably sooner than that. We just have the sell signal today. That's why I wanted to update it. At least 20% back down to that level there, about 735 right there. And again, I covered it yesterday in yesterday's video. I've been highlighting it for about a week or so. Somebody asked me a couple weeks ago. I told them it was setting up, and there it is. So we had the sell signal. That's it today. It's a sell signal. I'll kind of increase that position, or my confidence in the trade, on a break below 904 right there. And again, like I said, if it's kind of like any trade, especially if I'm viewing it as a long-term trade, my views will be flexible or malleable. If the economy continues to be resilient and the consumer holds up into 2025, then sure, you're not going to see Netflix crater. If you start seeing the jobless claims kicking up, new claims like we had this week, hotter than expected, and the overall national unemployment rate kicking up. Here, I think I can show you that. I can pull it up here. I had it earlier today. Durable goods. Here it is. National unemployment rate right there. Boom. And just go back here. You can zoom in. You can see this is, I've covered this in the past. Kind of troughed out here. It's been ticking up. And if you're new to the site, what I've covered is the way this works. And so the cheerleading squad on TV will tell you this is why the stock market's just going to keep going up in 2025. Is that we all know, or at least those of us, if you have an economic background or you study financial markets, the consumer spending accounts for over 2/3 of GDP. So as much as the government wants to stimulate the economy and spend and do government hiring, it's all about the consumer, not even a close second. So when the consumer rolls over, the economy rolls over. There is no variability in that. There's no exceptions. There's not enough money that the Federal Reserve can print to stop that. And what I've always highlighted here is that unemployment goes down. It has a very clear pattern. You can go back as far as you want. And when it gets to the low levels, and again, you have to take this as a longer term perspective. I know I've been saying this for probably 5-6 months or more on this. These are long-term multi-year trends. But when they bottom, you can stay at the bottom for a little bit, but relatively quick. It's a V. When employment turns, when that trend, and you can just look at eyeball and see when the trend changes, then it starts to accelerate, and invariably the recession follows. The recessions are these gray areas here. That was COVID. Yeah, there was an extreme, obviously, because they shut the economy down, global economy. The turn's already come. This rally, and I know that some of you don't want to hear it anymore, and the market's doing this. This rally is on life support. It's all about this AI bubble. It's similar to 1999. And again, I'm going back as far as I can here, all years. Just know that we've already turned. There's no exception in history. It turns in, the recession follows, and the recession comes after the turn. So we're looking, I know I'm in a very, very small and ever shrinking minority, but we're looking at a recession, almost, in my opinion, a very, very high likelihood in 2025. One that has probably already started and will only be recognized in hindsight. What's happened this time around is that we're in a bubble. We're in a speculative mania with a lot of crypto and AI hype and all that. Similar to the closest analogy I have is the 2000 to what's going on with the difference between the stock market and the economy. So that's that. I just wanted to point that out. And again, I'm giving you not just fundamental ramblings of where I think the economy is going. I'm not going to go broke betting on a recession that may never come. I'm going to trade stocks off the charts, and that's just the whole point of that long rambling thing is that people are going to have to cut back And you're not going to cut back on your groceries. You still got to feed yourself and your family. You're not going to stop paying your rent, your mortgage, your heat, your electric bill, your water bill, right? Those things you keep paying. When you have to cut the fat, you're cutting the excesses. And people are going to look down and they're going to see, like me, they're paying for 5, 6, 7 streaming services and they don't need that many. And so anyway, I think there's a big drop coming in Netflix and some of the others. All right, and we're almost done. No, that's it. That's 10. There's the top 10 components. There's what's going on today. Again, my apology. I would have had this video out to you probably 30 minutes earlier, but the first one I had that little snafu with the pause. I used that pop today when I saw that earlier to increase some short positions. I told you 2 days ago that I wasn't going to be shaken out yet because SPY and NVIDIA were still below. Even though we had the whipsaw and QQQ, the sell signals that I gave you 2 days ago on SPY are still very much intact. That's the breakdown there, back test. And even better today, as I did the video and spent the time showing you the top 10 components, a lot of those are either have just recently broken down or on the verge of breaking down. So if we can get a nice red day in the market today, that's going to be a pretty good sell signal. And even though it's holiday season, we could see a good down week next week and maybe into the end of the year. All right, I'll wrap it up here, get the video out to you. Before I do, one more thing I want to show you. I'm sorry, I looked down at my notes. I was just wrapping up bonds. Let's not forget the Fed meeting is next week. Wednesday, they will announce a rate cut of 25 basis points. Is pretty much baked in the cake. So I put a little question mark here. We all know that this is the last 2 cuts right here. You saw the Fed completely losing control of rates. They cut there. A lot of folks thought that the long-term rates, especially the 10-year, which is the most important bond for the financial markets. Remember, Fed, you don't get to borrow at the federal funds rate. You borrow from a bank, and banks are pretty much pegging your mortgage and car loans and everything to the 10-year, give or take. And so we saw the exact opposite. Fed cut again here. Rates went up again. We got a little abatement here, but they've been moving up again. And I'm not making a hard prediction, more of a what to watch, and that's this. And I do think, if I had to take a guess, I would say whether it's immediately or sometime afterwards, we are going to break this trend line in the 10-year. We'll see. Let's see what happens next Wednesday. But if this trend line breaks and then you have a previous reaction high here, one there and there, this will be all hell will break loose. Not an immediate crash, maybe, depends how it happens, if that happens. So guys, all I'm just showing you is a big if. Now, if we do this and rates go down, longer term rates, that should be net bullish for the stock market. But if this happens, remember, I gave you those yellow and orange and red zones back in earlier the year in IEF, and we have now re-entered my yellow zone. And again, if we take out the recent high in yields, we're going to pop the trend line, all that, we're going to be in the orange zone. So what I'm giving you here is kind of a playbook. It's not a hard, I feel strong that that's going to happen. I think there's a good chance it's going to happen. And if it doesn't, then hey, that's going to support probably more upside in equities. If long-term, the 10-year bond, the yields start to pull back because bonds will rally. So anyway, something to watch there. As well as the stock market. I give you a lot to watch there on the top 10 and SPY and NVIDIA and everything else. All right, I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.